The full package of quantum trading indicators for MT4 has been put together with one idea in mind: to help you become a more consistent and profitable forex trader. Because the forex market is an uncompromising one, and it is here more than in any other that tools and indicators can help you to make sense of the many complexities this market presents. However, no indicator, no matter how sophisticated, can ever replace your decision making as a trader. But what good indicators can do is give you complex information quickly, easily, and in a visual way, allowing you to assess an opportunity fast and trade accordingly. The full package of quantum trading indicators is a complete suite of 15 indicators and tools, all carefully developed by real traders for traders, and are the ones Anna and I use every single day in our own trading. Now, if you're not familiar with who we are, this is us, David and Anna Cooling. We are both full-time traders and have been for many years, and we are the founders of quantum trading. And indeed, you may have already come across Anna through her best-selling books on Amazon, which have also been printed in several other languages, including Japanese and Chinese. And for us, it is humbling to think of so many traders around the world now following her work. We've been involved in both trading and investing for over 20 years, having started well before the internet even existed. Our entry point was unusual to say the least, as we began trading FTSE 100 futures on the Liffey exchange, now long gone, sadly. All orders were executed and filled by phone, which was a stressful experience to say the least, but we survived and now enjoy our trading more than ever. All the indicators we have developed and included in the package are based on our own trading knowledge and experience of how the markets work, and the forex market in particular. Each one has a specific and important role to play, and whilst each is freestanding in its own right, as a collective group, they provide a powerful and all-encompassing approach when meshed together. And of course, if you are familiar with Anna and myself, you will already know that our foundation methodology is based on volume price analysis, which underpins the complex world of the forex market, where levels and flows are also key. This is because the market is one of mean reversion, where currencies and currency pairs move constantly from overbought to oversold and back again, driven by forces of market sentiment and risk, and coupled with all the technical, fundamental, and relational factors which then complete the picture. And before I forget, please do remember the full package of quantum trading indicators is also part of our educational course, the Complete Forex Trading Program, which also includes live trading sessions with Anna and myself, along with a live chat room, which we call Trader Chatter, and exclusively for Complete Program customers. So we hope to see you there. And don't forget also, as a full package customer of ours, you will receive all future indicators we develop free of charge. This is something we offer to everyone who invests with us in the full package, so you never pay us any more. We simply add new indicators to your user dashboard, and it's yet another reason to invest. And it's just our way of saying thank you to you for investing in us, and is a way for us to give something back in return. So let's take a look at the full package of trading indicators from quantum trading and see what's included. And in very simple terms, the package breaks down into 5 broad categories or types of indicators, and these are as follows. First, we have the currency-specific indicators, which help you to make sense of the complexities of the forex world. And these are the currency strength indicator, the currency matrix indicator, the currency array indicator, and the currency heat map indicator, and all have a different job to do, which we'll look at shortly. Next come indicators that fall under the term price and volume. First is the tick volume indicator, which underpins the volume price analysis methodology. Then we have the dynamic volatility indicator, a simple but very powerful indicator, with the dynamic price pivots indicator alongside. And finally, to complete the set, we have the Renko live charts indicator, which opens up non-time-based charting techniques where market momentum is revealed directly on the chart. The next group of indicators covers support and resistance, which is a key part of any technical approach to trading. And the first here is the dynamic support and resistance indicator, which delivers this in real time. This is complemented with the volume point of control indicator, which embraces the price, time and volume relationship, and so moves volume from the x-axis of time to the y-axis of price. Two trend and momentum indicators come next, with the trends indicator helping to describe trend changes and, equally important, trend congestion, so works close to the price action, whilst the second of these, the trend monitor, takes a more considered view and smooths out many of the minor reversal and pullbacks which occur in all timeframes. Finally, we come to the three indices, which describe individual price action for two of the most important currencies, the US dollar and the Japanese yen, on a chart, in just the same way as any other price chart, but here they reflect a currency. So now let's take a look at each of those indicators in a little more detail. And if we start with the first group, which is the four currency-specific indicators, and beginning with the currency strength indicator. The currency strength indicator disassembles the forex world into the building blocks of the market itself. In other words, the 8 primary currencies. And this indicator has been designed to tell you instantly which currencies are rising strongly, which are falling strongly, and those which are moving in a range. In addition, and equally important, the indicator also reveals when a currency is approaching an overbought or oversold state, with a possible reversal or correction in trend. The 8 currencies are displayed as individual coloured lines, making it quick and easy to spot trading opportunities. If one currency is rising strongly and another falling strongly, then a strong trend is likely to be developing in that pair. But if two currencies are rising or falling together, then that pair is likely to be in congestion and may not be one to consider at present. Equally, if one currency is strongly overbought and another is strongly oversold, this is likely to be the signal for a potential reversal or pullback in trend. Here it's a case of getting in early and maximising profits as the new trend is established. Changing timeframes is a breeze, and within seconds you can see how all the currencies are performing from 1 minute to 1 month and back again, and then it's over to the charts for further analysis. By contrast, the currency matrix indicator ranks the 28 currency pairs in a leaderboard of strength and weakness in your chosen time frame. Here you will see instantly those currency pairs which are rising, those which are falling, and those at the extremes of strength and weakness. In addition, by selecting one currency, the pairs in the currency complex are highlighted, which then confirms whether sentiment for the currency is universal across the complex, a key issue, as we always want to be trading with the universal flow. In other words, think of sentiment rather like a river, and we want to be rowing in the direction of flow and not against it. The currency array indicator takes us to the next level of analysis of currency strength and weakness. Now we want to see the strength of the trend in all 28 pairs, which is what this indicator is all about. The currency array indicator instantly reveals trend strength graphically and in all time frames. In other words, which currency pairs are trending higher and lower with the greatest speed and momentum. And as you might expect, it also displays those currency pairs which are currently in a congestion phase with little or no trend. But as the trend develops from the center outwards, so the angle of the trend line increases constantly until it approaches or reaches an extreme on one side or the other of the array, with an overbought or oversold signal then generated on the ranking ladder alongside. Finally comes the currency heat map indicator, which delivers a two-dimensional global view of risk and sentiment on one single chart, vertically on the ranking table and then horizontally across the horizon of time, presenting this information instantly, simply and powerfully. The table tells us whether a pair is bullish or bearish across all the time frames, so giving us an immediate view of sentiment for the pairs. So if the performance score for a pair is negative, then it is bearish, and each cell of the table is painted red. But if the score is positive, it appears green. And when viewed across the time frames, this then provides a real-time view as sentiment strengthens or weakens, with time then weighted accordingly to provide the ranking ladder on the left of the indicator, which reveals the current standings for strength and weakness dynamically. Now let's move to our second group, which is described as price and volume indicators, and starting with the tick volume indicator. The quantum tick volumes indicator takes a simple tool and makes it come to life. First, it paints the volume bar to match the candle. This makes it quick and easy to identify buying and selling volume with the associated price action. Second, the quantum tick volume indicator displays a dynamic midpoint, instantly revealing whether volumes are high, average or low in the session. No more guesswork. Volume analysis made simple, making it easy to spot profitable trading opportunities fast. The volatility indicator has been developed with one objective in mind: to confirm volatility in real time and clearly on the price candle the second it arrives. And you may be asking why this is important to know, and the answer is very simple. This is when the insiders are active and setting out to trap traders into weak positions. Volatility is generally associated with news or events, and when it occurs, the insiders take advantage. This is why the price action generally reverses and retraces back within the spread of the candle, trapping traders into weak positions. The pivots indicator is another simple yet powerful tool, but perhaps if we start with what it is not a signal reversal indicator. What it is a signal of short-term changes in sentiment over 3 price candles, and used in this way, the indicator then helps to describe when markets are moving into a trend phase or developing into a trend. The indicator does this by considering the arrangement of the pivots as they arrive in real time, which then helps to describe the price journey as it develops at the live edge. Because it goes without saying that understanding price action and being able to determine where the price action is heading at the live edge of the market and in real time is one of the keys to success. This simple but elegant indicator helps to deliver this analysis visually and clearly and in all timeframes. Finally in this group comes the Renko Live Charts indicator, designed to give us a non-time-based charting approach and which also reveals momentum of the market. The indicator can be set to create a standard brick value prescribed by the trader, or more powerfully, can be set to determine the optimal setting using an average true range approach, which is done automatically by the indicator. It can be immensely powerful when used in combination with a time-based chart, as this then smooths out some of the noise of the market, and so can be used as an entry and exit trigger. And in addition, the indicator is brilliant at highlighting optimal stop-loss positions. And now we move on to support and resistance, which is one of the fundamental building blocks of technical analysis. And whilst lines can be drawn and redrawn manually, these indicators do all the hard work for you. And the first of these is the support and resistance indicator itself, which is dynamic, precise, and intuitive. And it is constantly scanning, calculating, and updating these levels in real time. And if we think about this logically, it makes sense. After all, if price is constantly testing or retesting an area in real time, then this must be building into regions of support or resistance, which the indicator then delivers on the chart graphically. Each level is pinpoint accurate, and once clusters appear, then this merely confirms the regions of greater concentration of strength. But this indicator only delivers support and resistance levels from a price-based perspective. The second indicator then considers support and resistance from the perspective of price agreement and disagreement as confirmed with volume. The volume point of control indicator displays a histogram of volume and volume nodes, which describe the high and low volume regions against price, where price has paused in the past and transacted volume has duly built. So where there is a heavy concentration of volume, then clearly this is likely to act as support or resistance in the future for two reasons. First, there may be traders locked in these regions and waiting to exit, and second, this is clearly an important area of price as far as the market's concerned. And if it was important in the past, then it is likely to be important in the future, and therefore provide a stopping point for congestion. Equally, where low volume concentrations exist, then the market is unlikely to pause. The VPOC itself, or volume point of control, describes the maximum concentration of volume on the chart, and price will only move away once sentiment has shifted to one side or the other, and you can think of this as the fulcrum of the market, and it works in all time frames from the fastest to the slowest. And now we come to another important group, which is the trend and trend momentum indicators. And whilst there are only two shown here, the trend monitor is in fact two indicators in one, making a total of three. First, we have the trends indicator, which is extremely sensitive and helps to describe trend and no trend phases of price action visually and quickly. It does this using the trend dots, and whilst the trend higher and lower are easily understood with the associated color changes, the indicator also changes color when a trend is becoming exhausted, and so the trend dots change color to a different color which reflects and signals this fact simply and quickly. And these changes are those which are so important, as any congestion phase may be a temporary pause point, but equally might be the start of a full reversal. And whilst the trends indicator works very close to the market price action, the trend monitor steps back and considers the trend over a longer period, and so smooths out all the minor pullbacks and reversals which occur in every longer term trend. And as we know, staying in a trend to maximize any return is the hardest thing to do in trading, and is one reason many traders find it so difficult to progress. The trend monitor has been created and developed to help you with just this problem, and only changes color from bright red to bright blue or vice versa once a change in trend has occurred. But it also signals pause points with a change to a darker shade of color. The trend monitor also has an inbuilt secondary indicator, the trend line, which works off a midpoint reference line and so helps to provide perspective both on the strength of the trend and also on any extreme and potential exhaustion point. And now we come to the final group of indicators, but which are not indicators at all in the purest sense. Instead, they are important price charts of the most important currencies in Forex. These are the price charts for the US dollar and the Japanese yen, the two kingpins of the Forex world. And if you can follow and analyze these currencies with confidence, then this is 90% of the battle of trading Forex. First up, we have the DXY, and often referred to as the Dixie. This is the oldest measure of US dollar strength or weakness and uses a basket of currencies to derive the price chart. However, whilst this index is popular, it does have flaws, and most importantly, in the weighting of European currencies, and in particular the euro, where it has a weighting of 58%, a huge percentage, whilst the more important yen only holds a 14% weighting. Nevertheless, it is an important index to follow, and one which reveals strength and weakness in the US dollar in all timeframes, and can be read in a technical way, just like any other chart. Next comes the JPYX index for the Japanese yen, and this is a much more straightforward index with just 4 major currencies composing the basket and all equally weighted. And just like the US dollar, the yen index chart can be read like any other price chart and reveals yen strength and weakness from a technical perspective in all timeframes. And in order to provide a more balanced view of the US dollar, we've taken the same approach as for the yen and applied this to our second US dollar index called the USDX, which offers a more balanced view on the dollar and based on 4 equally weighted major currencies. And of course, whilst the full package is a complete suite of tools and indicators, there is nothing to say you have to invest in all of them. Indeed, many of our customers decide to choose only those which suit them or fit with their own trading style. So the choice is yours entirely. Start with 1 or 2 and perhaps add to them over time. Alternatively, you can start, of course, with the complete package. The decision is yours. I hope this video has explained and given you a flavour of what's included in the quantum trading indicator package. But if you would like to discover more, just head over to the quantum trading site at www.quantumtrading.com, where you will find a host of videos and support pages which explain the indicators in much greater detail. And for more information on the complete Forex trading program, please just hop over to www.quantumtradingeducation.com. And both Anna and I look forward to welcoming you as a customer of quantum trading, and of course also wish you every success and good fortune in your own trading endeavours. Trading is not easy, but it can be immensely rewarding, and part of the pleasure of trading comes from making sense of this challenging and complex market with the indicators there to help you in your own trading journey.